Hello, everyone, and welcome back to another episode of Stock Break with me, Josh Gilbert. Today, we're going to be analyzing Checkpoint Software Technologies. They are a software company that provides cybersecurity to governments and businesses. Their services focus on identifying and eliminating malware, ransomware, and other harmful cyber attacks. We're here to help you understand Checkpoint Software's business model, how they make their money, and what's ahead in a simple and short breakdown. But before we get started, of course, if there's anything that you want covered across these stocks, please let us know. And of course, don't forget to like, share, subscribe, give us a rating, and send it to your friends. If you're listening to this in podcast format and would like to watch along with the presentation, there is a link in the bio, and you can head over to our YouTube channel to watch. And a quick shout out, we also had the pleasure of recently speaking to Checkpoint's CEO, Gilbert, who gave us valuable insight into the business and into AI on our recent Conversation with Leaders episode. So if you want to hear more from Checkpoint CEO Gil, then have a quick look in Digest and Invest library. You will be able to see that episode there. And of course, a quick reminder that the presentation and podcast today is for educational purposes only and should not be taken as investment advice, a personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. So on to Checkpoint. It's been a great start to the year for technology stocks, but it's been a tough start to the year for Checkpoint. Their shares have fallen by 1.6% so far in 2023, as the broader Nasdaq composite has risen by more than 27%. The company has also returned just 27% in the last 5 years, which, as we can gather, has underperformed the S&P 500 and the Nasdaq. So the big question is why is the company lagging behind, and what's next for this software firm? Well, let's find out for you. But before we do that, let's take it back a little bit. We'll go back to the beginning and tell you everything you need to know about this company before we dive into sort of what's ahead. So the business was founded in 1993, and it has its international headquarters in Tel Aviv in Israel, but it operates worldwide. The company is listed on the Nasdaq and listed publicly with an IPO back in 1996, where they raised over $67 million. And since that time, shares have been very successful, jumping by more than 3,000%. Interestingly, though, Checkpoint was founded, as I mentioned there, in 1993, but that was actually a year before the web browser came to market in 1994. So essentially, what Gilbert did with Checkpoint was actually create malware security for the internet before it was actually created itself. But Checkpoint looked to America to sort of secure its first clients. That's where they first went. That wasn't easy. The idea of the internet was still very new, but Gil did a very good job. They sold $1 million worth of its software in 100 days, and Gil is now well considered the modern day inventor of the computer firewall. So a great job in getting that off the ground. And then if we look slightly ahead, moving forward to 1997, Checkpoint had 44% of the worldwide market share for firewall and now secures more than 100,000 businesses and millions of users worldwide. So they were, very much the innovators in this space. Then fast forward to 1998, Checkpoint established a partnership with Nokia, which bundled Checkpoint's software with Nokia's computer network security applications. And then it later went on to acquire Nokia's network security business in 2009. This acquisition allowed Checkpoint to sort of broaden its footprint in the security appliance market. And that sort of led the key to growth, really. Checkpoint has sort of used acquisitions as a focal point of its growth over the years. 15 acquisitions since its founding, with 6 of those acquisitions coming since 2019. Checkpoint also works with some of the largest companies and organizations around the world as its clients. So we've got US government entities, NHS England, Xero Accounting, and many, many more. And in late 2016, Checkpoint actually found a breach in some 1 million Google accounts and actually worked with Google to fight the cyber attack as well. So a quick look at the management. As I mentioned, Gil is the founder and current CEO. Gil, as I said already, is renowned in the cybersecurity industry, and he has received numerous accolades for his individual achievements and industry contributions. And importantly, his leadership has been a key for Checkpoint's healthy growth over the last 30 years. And that has translated into no staff layoffs and super high margins, which is very impressive for a technology company going through, lots of different periods, dot-com bubbles, and obviously the pandemic, as well as sort of, right now we're going through sort of the year of efficiency, if you like. So that points to sort of Gil's leadership in the team. And as I mentioned at the start, a reminder to check out our interview with Gil on Conversation with Leaders. The link is in the bio, a fantastic and insightful interview. And an important note, just to sort of mention alongside Gil, they do have a very important member of the team in their CTO or Chief Technology Officer, and that is Dr. Dorrit Dorr. She has been instrumental to the organization's growth as well alongside Gil, and she's managed many successful product releases for the business after joining in 1995. So as a software company, you're relying quite heavily on your CTO, and Dorrit has been there for pretty much the beginning alongside Gil on this journey. So another point I wanted to sort of touch on a little bit as well is ECG and sort of corporate governance. So obviously a huge part for investors when considering a stock today is its ECG score. And Checkpoint does very well in this space. It currently gets a score of 73 out of 100 from eToro's ECG scoring, which is available on the eToro platform, which is actually very high for the industry, with the average being around 48. On top of this, the company has an outstanding track record for company satisfaction, with a strong Glassdoor rating of 4.5 out of 5, with over 6,400 employees on its books. So again, from the ECG and governance side, doing very, very well. And obviously it's a great place to work. And that is key, I think, to looking at when considering companies that you want to buy. And it's a big factor for investors these days when purchasing stocks. So to have a sort of a quick look at the performance this year, I mentioned it right at the start, about sort of how the stock has sort of lagged behind, and we'll break this down before we break down the numbers over the last sort of couple of years. And the company has lagged behind the sort of broader tech rally this year. In the 1990s, the company was sort of growing rapidly. In 1999, its revenue soared 55% to around 220 million, with a net profit margin of about 44%. Between its 1996 IPO and October 2000, Checkpoint shares rose at an average of 119% annual rate. So huge returns over that period of sort of the dot-com bubble, but slowed down slightly since then. Q1 earnings disappointed investors and shares fell as a result. Earnings did beat expectations, but revenue missed the mark with just 4% growth. Analysts believed that Checkpoint didn't do enough to excite investors, and its new offerings wouldn't improve subscription revenue this year. This then was followed by a number of downgrades, with analysts believing the stock would trade range bound this year, which is why we've seen the company come under a fair bit of pressure since then, and as I say, under sort of performed the broader tech rally. But I think what's important to know is that the growth is slow and steady for this business, and we'll touch on that in a little moment. So let's dive into the company's financials a little more. So a quick reminder for those listening in podcast format, I'm going to be showing some charts here via YouTube, so feel free to head over to the YouTube channel if you want to watch. The link is in the bio. So we're going to start with revenue. Checkpoint's revenue has grown at single digits levels for the last few years, but 2022 was its best year for revenue growth since 2015. Revenue grew by 7.5% to 2.3 billion. And this was split across 3 revenue segments. So we've got products and licenses, software and maintenance, and security subscriptions. Its software and maintenance segment is the biggest revenue generator at almost $1 billion. So that's a key focal point for investors to look at. I mentioned a moment ago there about Q1 revenue missing Wall Street expectations. Revenue came in at 566 million. Checkpoint's product sales declined by 7%, which suggests that the company is likely getting hurt by enterprises shifting their cybersecurity spending towards cloud products instead of maybe refreshing their firewalls. And we're going to touch on that a little bit later on, because there's obviously a big shift right now towards cloud computing. But for the full year, Checkpoint expects sales to be between 2.34 billion and 2.5 billion, which is slightly ahead of analyst estimates of revenue growth to be at 2.4 billion. So if they can reach the top end of that estimate, they will essentially be beating analyst estimates, and the 2.4 billion would represent a 3.7% growth year over year. But Checkpoint does have a favorable valuation, and we're going to touch on that a little bit and compare that to the cybersecurity industry that is obviously growing. And I think that's what makes this stock attractive to sort of value investors. But as I say, we'll touch on that in a moment. So now on to sort of profitability. The business has been profitable for many years now. I mentioned earlier about strong margins, and we'll get onto those margins in a moment. But profitability peaked in 2020 at just under $1 billion, but has slid slightly since then. For the full year 2022, net income was 934 million, down around about 1% from 2021. The market expects net income to jump by 1.8% in 2023 for the full year, with net income of just 950 million. Q1 net income was 217 million, which means a strong start to the year, but it's going to need a strong rest of the year to come to fruition to ultimately reach those full year estimates. Costs have increased recently, which is one of the reasons that we've seen a little bit of a drop in net income. Gil sort of spoke to this on the Conversations with Leaders episodes that I mentioned. He was talking about investments affecting short-term profitability, but they should mature into the future. So there is clearly a focus on sustainable long-term growth, which should aid profitability moving forward. So now onto its cash. So cash is actually an interesting area for Checkpoint, as they have a fair amount of it. At the end of 2022, they were sat on 3.5 billion in cash and securities, which was slightly less than the 4 billion in 2020. The cash pile has caused some question marks with investors, though. Some shareholders have called for a dividend, given that it's got a fair cash pile. Growth has slowed down pretty significantly from where it has been in previous years. But others want the money invested for growth to increase this growth that has been seen over the years. So as I say, going back to the dot-com bubble, we saw hyper growth that has obviously slowed and been slightly more modest. So investors are asking for that cash to be invested to see growth pick up. The good news, though, is they've got $4 billion basically in cash that they can now lock in for, say, passive income. Rates are at 5% globally as we speak. That can add to their regular business activities and would be a great income stream as well. So that's an important focal point, and we may get some more updates on what Checkpoint is planning to do throughout this year with that cash pile. But look, their cash pile has been significant for many years, and as I say, they're not sort of quick to spend on acquisitions. They make very strategical acquisitions, so I think that's the focal point here. So now we're going to move on to the key ratios for Checkpoint. So it's important to note that if you aren't familiar with some of the ratios that we sort of talk about here and would like to know more, head over to the eToro Academy where we can explain them to you in some greater detail. So the first to look at is price to earnings. So as I mentioned earlier, Checkpoint as a technology company is now currently trading at a lower valuation than its industry peers and compared to the rest of the cybersecurity industry. The company has been in business now for over 30 years and has gone past its hyper growth phase and is a mature business which is seeing slightly slower growth. It currently trades at 15 times forward price to earnings. This is more than half the valuation of the Nasdaq composite, which trades at 32 times earnings and is significantly lower than industry peers such as Palo Alto, CrowdStrike, and Fortinet, who trade at 37 times and 40 times forward earnings between the three of them. Of course, these companies are clocking much faster growth. So CrowdStrike, for example, reported a 54% increase in revenue last fiscal year to 2.24 billion. And the company has guided for terrific growth in the current fiscal year as well. But again, as I mentioned a few times, Checkpoint prides itself on slow and steady growth rather than rapid and risky growth, which has been the key to their long-term success, and Gil's strong management there. So again, a couple of different businesses, but the business has continued to deliver for investors, over its history, delivering more than 12% annualized returns since its IPO. Another important ratio for investors to look at is price to sales. This ratio shows how much investors are willing to pay per dollar of sales for a stock. It can often be effective in valuing growth stocks. It is calculated by a stock's last price divided by sales per share. Now, this is actually pretty high for Checkpoint at 6.6 price to sales. That would be considered pretty expensive, especially compared to the average of the Nasdaq composite, which trades at 3.4 price to sales. We can also then have a look at gross margins. Margins are going to be a really important an area to look at. Margins ultimately stand as a key area, and as I mentioned a few times, these are really important for Checkpoint. At the end of 2022, gross margin was 87.4%. The market expects this number to grow slightly for the full year to 87.6%. Margins have remained high over the years for Checkpoint. They even reached as high as 95% in 2001. So really, really high over the years, and something that Gil and the business pride themselves on. So those are the numbers, and I want to look ahead now. And firstly, I want to start with some of the challenges that Checkpoint may face moving forward. So I think a key sort of note to sort of make, and we've covered it a few times, is the sort of the differential here between Checkpoint and some of its competitors, and obviously time that these companies have been in business. But a key for technology is staying ahead. For Checkpoint, investment in research and development is below the fastest growing players in the industry. Currently, they spend 16% of their net sales on R&D, which is lower, say, compared to CrowdStrike or Palo Alto, which is 25% or 24%. So even though Checkpoint is spending above the industry average on research and development, it's not really competing with the leading players in the industry. And that may be why we're sort of seeing slightly lower growth and maybe slight struggles in terms of innovation. This, as I say, is maybe due to that maturity. And instead of focusing on products that aren't groundbreaking, they are focusing on products that they already have in market, and ultimately focusing on those, and cracking those sort of market. And as I've said a few times, slow and steady growth. I mentioned it at the top of at the top of the episode, but I talked about that slightly slow exposure to sort of cloud. Checkpoint's sort of top line gains are sort of trailing slightly over the global sort of network security expansion. And I think the reason that is because its cloud exposure remains smaller than peers. We're sort of seeing an accelerated migration of workloads to public clouds from, say, on-premise data centers. And I think that will remain a headwind to its essential share in the sort of, it controls the firewall market, and that's where it has its market share. But this shift to public clouds is a slight worry for Checkpoint. As I mentioned a moment ago, Checkpoint's product sales declined 7% in Q1. And I think that is a suggestion that they are getting slightly hurt by this shift of cybersecurity spending towards sort of cloud products as well, and sort of moving away from that refreshment of firewalls. But this is a challenge, but it is also a huge opportunity as well for Checkpoint if they can continue to focus on that market and maybe spend some of that $4 billion on acquisitions over that time and into the market. So let's have a quick look at what is ahead for Checkpoint and some of the opportunities. So now that we understand sort of the hurdles and the challenges for Checkpoint, let's take a quick look at some of the opportunities. So I think the key one is artificial intelligence, but also just cybersecurity. I will touch on a little bit the artificial intelligence side a little bit more throughout the episode. But I think the growth of online activity and cloud alongside what we've seen in artificial intelligence means that the need for cybersecurity, has never been higher. We've got an astonishing growth of new technologies and solutions. And we're also seeing that data breaches across the globe are rising as well as, the world becomes more digitalized. And we're also seeing an increase in sophisticated cyber attacks as well. And again, we'll touch on that a little bit with AI in a moment. But a report from Markets and Markets projected that the global cybersecurity market is poised to reach 266 billion by 2027, growing at about 8.9% from 2022 to 2027. So a huge market. And I think that is something for investors to focus on when they're looking at the future here for Checkpoint. So I've covered it a few times, but its healthy balance sheet, I think, is going to hold the key to enabling M&A, mergers and acquisitions to help that cloud growth. We spoke about then how the cloud is going to be a challenge for the business. Its cloud expansion has been quite slow and may hurt its positioning, but they've got $4 billion on its balance sheet. And I think there is going to be opportunities there on the acquisitions front for Checkpoint. And ultimately, we know that it isn't afraid to explore acquisitions. They've done it plenty of times over the years. They recently acquired Avanan, which is a cloud security platform, in 2021, and another company called Spectral in 2022. So that's progress, but that has slowed since. And I think that's going to be the key to sort of keeping up with competitors. And I think looking across this current market, we obviously saw, a difficult year in 2022. The Nasdaq has risen fairly significantly this year, but disruptive tech is still under pressure. And I think that has seen a sharp fall in tech valuations. And I think that could open up opportunities on the acquisition front to help boost sales growth, and fill gaps in their portfolio as well. And I think we've seen that with competitors. Palo Alto Networks has made several acquisitions to accelerate its cloud shift. And maybe we'll see the same from Checkpoint moving forward. So the next one I want to sort of talk about a little bit is its valuation. So it's currently trading at 15 times forward earnings, which I mentioned earlier. And I think that valuation and sort of current share price may be undervalued against peers. I think this is because the company has matured and growth has slowed, but they are in an industry that is continuing to grow and evolve. So if we look at competitors, such as, some of those other names I mentioned earlier, they're trading around at about 40 to 45 times forward earnings. Checkpoint looks like a cybersecurity play for, say, a traditional value investor, maybe someone that is taking on less risk and is looking for sort of solid growth rather than, higher risk growth. There is a huge opportunity still for Checkpoint in the cybersecurity market, but it is focused on steady and continued growth and maybe not sort of fast growth with, declining growth, which is what we've seen from some disruptive tech stocks over the last couple of years. So we mentioned a little bit about AI there. And unless you've sort of been living under a rock, you might know that artificial intelligence is sort of the talk of the world right now. And this is a great opportunity for Checkpoint. AI can enhance Checkpoint's ability to detect and prevent threats. So not only can it help their business, but given how powerful AI is, cyber attacks will become more sophisticated, whether it's using ChatGPT for phishing emails and coding. That means that Checkpoint and the cybersecurity industry is well placed to benefit to protect businesses and consumers against AI as this technology continues to grow. It is an evolving technology that I think that we will continue to see more of down the line. But again, AI is also going to, help Checkpoint to streamline business tasks and help to improve productivity as well. So, it's a bit of a win-win here for for Checkpoint. They can stop cyber attacks from people using AI, but they can also use their technology inside its business as well, because that integration of AI can significantly strengthen Checkpoint's cybersecurity solutions. It can help against threat detection, faster incident response, automation, and also just a better experience for its customers across the board. So again, that was sort of the breakdown of the challenges and opportunities. Now just a quick look at the sort of potential valuation. This is a sort of a look at the 5-year price to earnings sort of model. There's some great numbers here that you can sort of take away. Again, these are sort of analyst projections and consensus. So they're not always going to come to fruition, but they're a good idea and something to sort of keep an eye on. As we can see, we've got steady growth projected that is set to sort of keep growing, but maybe a little bit slower than what we saw in 2022, but picking up again from maybe where we were in 18 and 19. 2024 looking at 4.3% in revenue growth, 4.2% then in sort of 2025. So if you're looking at sort of valuation models, this is some numbers that you can sort of use here, play around with the price to earnings ratio, using price to earnings ratio times earnings per share. You can also consider a couple of other sort of methods here as well, but these are just some numbers to sort of give you a better understanding of what sort of their valuation can sort of look like in the future, and to give you a bit of a better understanding as well. But as I say, trading at a pretty nice valuation right now, around 15 times forward earnings. So again, fairly cheap when considered against market competitors. So a quick look at its summary. So just a quick understanding of what's ahead for sort of Checkpoint really, and just sort of wrapping all of that into sort of one piece here. So as we know, Checkpoint is known for its computer firewall technology and has a strong presence in the global firewall market, and was an innovator within that space. Checkpoint has previously used acquisitions as a strategy for growth, made over 15 acquisitions since its founding, and this could hold the key to spurring on growth in the future with its healthy balance sheet. Recent financial performance shows that revenue growth in 2022 was strong, but Q1 2023 fell short of expectations. Net income declined slightly, but the substantial cash reserve is still there. So we're going to be focusing a little bit on profitability as we move through the year. Can they continue to deliver? And can revenue growth pick up and continue and stay as high as it was in 2022? We've mentioned it a few times now, but Checkpoint has a relatively low valuation compared to industry peers, with a forward price to earnings ratio of 15 times forward price to earnings. The company also has high gross margins, but its R&D spend and cloud exposure are potential obstacles for the business. And finally, AI does hold a huge potential for Checkpoint as cyber attacks become more sophisticated and businesses need greater protection. So again, that was the breakdown of Checkpoint. Let us know in the comments what you think of Checkpoint, and if this is a company that you've got on your watch list or if you own. And again, just to come back to it, if you want to hear more about the company, don't forget to check out our Conversations with Leaders episode with Checkpoint CEO Gilbert. As I said, a very, very insightful interview to learn more about the business. Combine the two of these and you should have everything that you know about Checkpoint. And a quick reminder to like, share, subscribe, and as always, let us know if there is a stock that you want to see next. And thank you very much for listening, and see you all next time.